BlackRock is tokenizing on the Hedera blockchain. What does this mean for the price of HBAR? And the crypto industry is suing the SEC once again, with the Blockchain Association and the Crypto Freedom Alliance of Texas joining forces to sue scumbag regulator Gary Gensler and the SEC over the finalized dealer rule. And Ripple has filed their opposition against the SEC's ask for $2 billion in penalties. And Brics countries are looking to develop their own crypto stablecoin for global trade settlements. We're going to break this down and much more. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify, Apple, or wherever you get your podcast, please hit the 5-star rating and leave a review. All right, folks, friendly reminder, my book, Rethinking Crypto, is live on Amazon. Be sure to grab a copy. It's called Rethinking Crypto, The Crash of FTX and the Rise of Safer, Stronger Digital Assets. Documents all the aspects of crypto's past, present, and future. It's a great gift for someone who wants to learn about this asset class and technology. Also, I have a book signing event on April 30th in New York City. So if you're in the tri-state area, we'll love for you to come by, get a signed copy of the book, meet me in person, and grab some food as well. So it'll be a good time. It's in the financial district. It will be right across the street from the Wall Street Bull. So great venue, great place, and looking forward to seeing some of you there. All right, folks, the big news of the day is that BlackRock is tokenizing on the Hedera blockchain. I am an HBAR token holder. I am very bullish on this project. I have been for a long time. Those of you who have been subscribers to the podcast know this. And I continue to accumulate HBAR tokens in the dips, of course, and the bear market lows as well. Not financial advice, do your own research. But here's the news from the HBAR Foundation today. They said, today we witness real-world asset tokenization history as BlackRock's ICS U.S. Treasury Money Market Fund, MMF, is tokenized on Hedera with Arcax and Onera, and marking a major milestone in asset management by bringing the world's largest asset manager on-chain. Folks, this is what you want to see when you are investing in a project, that it's getting real-world adoption from the biggest institutions in the world. And we know BlackRock is already tokenizing on Ethereum. So right now they are in their trial and error phase, testing out different blockchains, seeing which one is the most efficient, what works best for which products, and much more. So I wouldn't be surprised if they start tokenizing on Avalanche and other blockchains out there. So this is incredible, folks. For people who are still skeptics about blockchain and crypto, share news like this with them. Do you know about BlackRock? Do you know about Fidelity and JP Morgan, Citibank? They're all tokenizing. Citibank and JP Morgan are tokenizing an Avalanche. So incredible adoption, folks. And it's amazing what is taking place. And I say this because I've been here since 2016. And you go back to 2016 and up till about 2020, this type of news was not coming out. It was much harder to hold back then. But now, you're getting validation and news of adoption almost every week. So it's incredible. So they continued the announcement here saying this development builds on the growing portfolio of institutional real-world assets on Hedera, with Hedera Governing Council member Aberdeen, which is a huge firm, by the way, the UK's largest active wealth manager, tokenizing its flagship multi-billion money market fund on Hedera last year. So not only do you have the largest asset manager in the world, you have the UK's largest wealth manager also tokenizing on Hedera. That's incredible. This additional BlackRock money market fund, along with existing offerings, are all available directly on the Arcax platform, as well as through connected networks available to professional and institutional clients. Through the tokenization of this additional money market fund, the best-in-class combination of speed, security, and low fixed fees of Hedera are further validated, and we look forward to welcoming the next wave of global TradFi institutions to the network of RWA tokenization. And folks, you look at the names who are part of the governing council with Hedera, it's incredible. Google, Dell, Boeing, you got BitGo, which is one of my sponsors, folks. Incredible names. Shinhan Bank, IBM. And Hedera, I believe, will be one of the winners, and that's why it's in my portfolio. So incredible stuff here, huge adoption news. So what does this mean for the price of HBAR? I think it's certainly good for this bull market cycle. And here, Crypto Wizard gave a quick analysis today about it, saying HBAR is just getting started. So based off of this news, HBAR pumped a bit, so it was a big green candle. But in context of the macro, it's nothing, right? It hasn't retraced yet to even its old all-time high, which was about 49 cents in the past bull market cycle. But I expect it to certainly retrace and to certainly go to new all-time highs. Now, is that a guarantee? Of course not. I don't have a crystal ball, but if all goes according to plan and the liquidity flows from Bitcoin down to the alts, we could see HBAR do really well. If you look at it with the Fibonacci model on top of it here, I'm hoping it goes up to maybe it doubles its price and goes up to around between 90 cents to $1. I think that would be a huge win. I'm hoping it goes higher, of course, but if it just even goes to $1, that will be a huge win, and I will be certainly taking profits. So we have to be patient, but we know there's continued adoption of this blockchain, continued building. So things are looking very bright for Hedera and HBAR. All right, let's move ahead to the next news. Folks, we are seeing the crypto industry go on the offensive against scumbag regulator Gary Gensler and the SEC. They are suing the hell out of the SEC, and I love it. I'm here for it. I'm here to support it. I'm here to amplify it and talk about it, because we are dealing with someone, Gary Gensler, that is, that does not abide by the law. We see that in the courts. They lie to the judges. They lie to the courts. They will stab you in the back. We've talked about this ad nauseum. So Marissa Toshman-Koppel of the Blockchain Association tweeted out the news saying, today, the Blockchain Association and the Crypto Freedom Alliance of Texas sue the SEC over the recently finalized dealer rule. The rule is arbitrary and capricious and presents significant risk for digital asset market participants in the US. Now, where have we heard that terminology before, arbitrary and capricious? In the Grayscale lawsuit against the SEC, where those judges said the SEC acted arbitrary and capricious by not approving the Bitcoin ETF, right? So this is why we got to fight. We got to go on the offensive. The best way to take down a bully many times is to punch back, is to fight back. And I love that the industry is doing this. People are not scared anymore. They're taking off the gloves. And I think Gary Gensler is in for more than he can handle, because there's a lot of people leaving the SEC. There's people who don't want to work with Gary Gensler. So this is going to further expose him. She continues here saying, we raise several APA claims centering on the SEC's unlawful redefining of the term dealer. By statute, the courts and the SEC's own interpretation being a dealer previously turned on the specific services offered to customers. The SEC has flipped on its head. Now, the redefined term doesn't factor in a customer relationship and focuses entirely on whether a person's activity has the post hoc effect of providing liquidity. The rule violates the APA by exceeding the SEC's statutory and authority and failing to contain proper analysis. The rule has a majority detrimental impact on the digital asset ecosystem, particularly DeFi, pulling in liquidity providers and DeFi software and its developers. Although it is vague and unclear, requiring intermediation of DeFi protocols defeats the purpose of DeFi. So I love this. And if you all recall, the Crypto Freedom Alliance of Texas also joined up with new exchange Legilex, which is very small. Many of you may not have heard of it. But they sued the SEC proactively, saying, hey, what is a security and what's not? Are secondary market sales securities or not? I hope more companies start to do this. They don't wait for a Wells notice. They don't wait for a subpoena. They just out of the gate sue the SEC and lock them up in litigation, further exposing them for the lack of clarity that we need here in the industry. And we know Congress has to act, but Gary Gensler is a rogue regulator who's lost his mind. But we know it's not so much him per se, he's a puppet on strings. Elizabeth Warren's a puppet on strings, being controlled by those TradFi incumbents who are getting disrupted. That's the game here. Now, quite a few folks weighed in on this news. Amanda Tuminelli of the DeFi Education Fund, who I had on the podcast recently, we had a great conversation. She said, this is another great example of the industry going on the offensive and pushing back against the SEC's attempt to unlawfully expand its authority beyond what Congress has granted. Paul Grewal of Coinbase, chief legal officer, said, sensible SEC rules, we need to protect investors and innovation by making it possible to actually come in and register. He asked, nope. Arbitrary and capricious SEC rules that only add to market risk. Have all you want. The courts remain our last best hope. He's absolutely right. Thank goodness for the checks and balances, and that the courts are the one upholding the law here, and exposing the SEC, and not afraid to highlight all the things the SEC have been doing wrong. Ripple's Stuart Alderati says, in Gensler's 3 years as SEC chair, the agency has been sued for abusing its rulemaking powers more times than the SEC was sued in the prior 10 plus years, spanning the tenure of 3 long-serving chairs combined. And of course, guys, like we've been talking about for a long time, it's because disruption is at the door of the incumbents. Right? They're trying to slow this thing down so that they can come in and take over. And if you look at the two things that are happening in parallel, right? Crypto startups and companies are getting sued, Coinbase and much more, while BlackRock and all these big institutions are tokenizing and launching ETFs. They're not getting sued. They're not getting Wells notices. So how can these two things be happening in parallel? How can Gary Gensler and all these guys say all these things are fraud, it's a fad, and yada yada, and it's used for illicit activity? Oh, are you talking about Larry Fink using it for illicit activity? Is that what you're talking about? Of course not. That's just a narrative that Elizabeth Warren and these people want to paint because they're trying to kill these small crypto companies. And I say small in comparison to the BlackRocks and Fidelities, right? And the JP Morgans, which I've said many times, capital's leaving their funds, their TradFi investment funds coming into the market. People can self-custody. People don't have to go custody with JP Morgan or whoever else, right? People can earn a higher yield versus keeping it in their checking and savings account, their money, that is. So this is what's happening, and we got to fight. Like I said, we have the courts on our side, and we have social media, and we have the ability to drum up a lot of noise here. So this is great. Now, speaking of Ripple, guys, Ripple proposes no more than $10 million in penalties after the SEC seeks $1.9 billion for nearly $2 billion. This was not a fraud case. And we know the SEC, they're just going to pocket that money. It's unbelievable. They don't care about the XRP holders that got hurt, that lost a lot of value in their tokens when the SEC filed that lawsuit, right? Even at the warnings of Joseph Grunfest, former SEC commissioner who served under Ronald Reagan, sent a letter to Jay Clayton. Don't do this, my friend. Don't do this, because you're going to hurt investors and call into a question the agency's judgment. And we know how that has played out, all the things that have come out with Bill Hinman and much more. So Ripple's chief legal officer, Stuart Alderati, talked about this in a tweet. He said, our opposition to the SEC's request for $2 billion in penalties for legacy institutional sales is now public. In a case that had no allegations or findings of recklessness or fraud, and in which Ripple won on significant issues, the SEC asks, is just more evidence of its ongoing intimidation against all of crypto in the United States. We remain confident that the judge will approach this final remedies phase fairly. Now, I've been on record for a long time that Ripple will have to pay a fine. Will it be $2 billion? I don't think so. It might be 50 million or 100 million, which is nothing, right? But nowhere close to 2 billion, especially once again, no fraud. Nobody was hurt here. And many of the institutional investors who bought XRP directly from Ripple, the judge said, hey, look, those are securities transactions, but none of them are saying, hey, we want to sue Ripple because we lost money. Clearly not. This is not like a fraud case like FTX or Celsius or Terra Luna and things like that. So I think the judge is going to be fair here, but Ripple will have to pay a fine, but it won't be anything close to $2 billion. And scumbag regulator Gary Gensler can take another loss. Even if he gets $50 million, it's nothing close to $2 billion, right? Now, Ripple CEO Brad Garlinghouse weighed in on this news, and this was tweeted out last night. So for context, he says, feels apropos that we file our response on the same day that the SEC lawyers resign for their misconduct in the death box case. I talked about this in yesterday's podcast. He said the U.S. will be picking up the pieces of the agency's disastrous policies long after Gensler is gone. He's absolutely right there. All right, folks, quick word from our sponsor, and that is VeChain. I hold the VET token in my portfolio. I'm very bullish on this project. I have been for years, even before VeChain became a sponsor. on this podcast, but it is a layer one enterprise grade blockchain, one of the top ones out there. They are working with many big brands around the globe, such as PwC, BMW, Walmart, China. They're also working with the Boston Consulting Group, and many enterprises are building on this blockchain. They're building Web3 and decentralized applications and ecosystems. The great things about the VeChain blockchain is it's very energy efficient. It uses low energy. It is also great from the speed standpoint and security standpoint. That's why many enterprises trust it. So if you'd like to learn more about VeChain, go to vchain.org. Link will be in the description. All right, the news around the SEC continues here because coming up in May, and May 23rd specifically, that's the deadline for the SEC to approve the Ethereum spot ETF. A lot of folks are weighing in here. Eleanor Terrett of Fox Business gave the following update. She says 1 month out from the SEC's deadline to either approve or deny the ETH spot ETFs. Today, the SEC delayed making decisions on applications from Franklin Templeton and Grayscale. As has been widely reported, the consensus is that because there has been little or no meaningful engagement from the SEC staff on the issuers' applications, that they will ultimately deny on May 23rd. One issuer tells me re-engagement, it's not looking very promising. Another says the conversations they feel they need to have had it at this stage have not happened. But others are still holding out hope. They point to the facts and circumstances surrounding the ETH ETFs being similar to the Bitcoin ETFs, with the major difference being the issue of staking, which they say could be hashed out relatively quickly. They're also not convinced that Gary Gensler will want to go there again, coming up with the new grounds of denial, and in doing so, inviting other potential lawsuit from Grayscale that could ultimately have the same outcome as the first. Now, I disagree with this. I think we see scumbag regulator Gary Gensler doesn't care. He would go to court again, and even if he's going to lose, because once again, he's not in control here. His strings are being pulled by Elizabeth Warren, who's being controlled by Jamie Dimon and these people. We talked about this, right? So I think I've seen that Gary doesn't care anymore because it's like he's just following orders, and I don't think he can do anything unless his handlers tell him to. She says here, Grayscale has actually yet to file its Form S3 with the SEC, which is a key part of the process that converted. Actually, they did that today. So she published this at 2:46 p.m., but there was updates that the Grayscale did file their update. So look, we'll see. I personally don't think the approval is coming in May 23rd. I think there's a higher probability the SEC denies or delays or whatever it may be. And but there is a chance they could approve it, right? We'll have to wait and see what takes place. And I recently spoke to Bill Hughes at Consensus, which works on Ethereum. And, you know, one of the questions I asked him, he's a lawyer, would BlackRock and Fidelity and all these guys, Franklin Templeton, sue the SEC? He said, yeah, they potentially can do that. Imagine the SEC getting sued by all of these Wall Street players, which have applications for that Ethereum spot ETF. I don't think Gary wants to mess with that. Because it's not just Grayscale anymore, and these other companies are powerhouses. They got a lot of legal resources and capital to fight, man. So I don't think Gary wants to mess with that. So maybe they do approve it, because it would look really bad to have BlackRock issuing a lawsuit against you and Fidelity issuing a lawsuit against you. These are household names, branded and so forth, suing you. You can imagine the headlines, right, guys? In fact, here, a professor, James J. Angel, a Georgetown professor, shared some thoughts here, a comment letter about the SEC regarding the Grayscale Ethereum ETF. He says, for some inexplicable reason, the SEC is delaying Grayscale's request. No, not holding back. So, he highlights all the facts here. So, I think the SEC is not in a good position here, just as they were not with the Bitcoin ETF. And they're in danger of getting called arbitrary and capricious again and losing. So we'll have to wait and see. All right, guys, final news item here. We got the BRICS countries exploring creating a crypto stablecoin for global trade settlements. And I tweeted out about this. I'm very curious which blockchain they're going to use, if they use a public blockchain, because, they may not use the public version of the blockchain. So for example, the XRP ledger has private ledgers, Avalanche has private subnets, and so forth. They may use a public blockchain, but the private segment of it. But nevertheless, if they're using a public blockchain, I'm very curious what it's going to be. It'd be very fascinating. But folks, this is a clear indication of the potential of this technology. Governments are adopting it, Wall Street, big institutions, banks. It's here to stay. So as much as Jamie Dimon will spread FUD and get these people who say negative things, watch what they do, not what they say. It's incredible what's taking place, right, folks? And I've often stated we're headed to that token economy, CBDCs, digital identity, stable coins, cryptocurrencies, digital assets, tokens within different ecosystems, metaverses, social networks, gaming, your airline reward points, and all these things will be tokenized. And it opens up a ton of secondary market opportunities, even tertiary markets. So I'm excited, and I'm glad I'm here early. I'm taking my position, just as I opened the podcast with that Hedera news, BlackRock tokenizing on it. I'm looking at which blockchains are getting the adoption, folks. So that's what you want to keep an eye on. And I know that some of you are going to say, dude, that doesn't matter because, you talk about liquidity. You talk about the liquidity flowing from Bitcoin down to the alts. That is true. That's the speculation layer. But there is a utility layer, which I think is slowly creeping in. It's not fully mature yet, where it's driving markets. You know what I mean? Like Hedera didn't pump to its all-time high today on that news. Eventually, that type of news will do that, have that effect on the markets. I think we're a ways off from there once regulations and things come in. But nothing wrong with taking your speculation bets. I do that, with certain coins, which I'm like, it doesn't have too much adoption right now, but I see potential from a tokenomics standpoint based on, users' sentiment towards it and Metcalfe's law and network effects and so forth. That's why meme coins do so well, because there's people behind, there's people participating, right? So we can't deny these things. But ultimately, if we're talking about the long term in which are the cryptos are going to be around, you want to see the ones that are going to be used by governments and financial institutions, right? So that's how you got to approach it. And guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Don't forget to check out my book. Link will be in the description. Thank you for watching and listening, and I'll talk to you all later.